Welcome in from Sunnyvale, California. I'm Mark Vierra. This is a technical analysis video to go over the charts that I'll be posting in my weekly trading log and just some basic technical analysis. You can find my weekly trading log off of the HotStockMarket main page. You also want to check out here, Cy McAfee puts together a pretty nice main discussion thread. You get lots of discussion going on there throughout the week, and he's put together the financial reports, what's going on in the markets, all kinds of interesting stuff there. And with earnings season, let's scroll this down here, some videos and lots of good stuff. See your main scheduled earnings, all the earnings reports are in here. When to, what time. Anyway, let's get into the video. I think we want to, the theme for this is sell in April and buy back in May. Wait, isn't that sell in May and go away? Well, let's put that into perspective. First, let's take a look at the week that was. Had a whipsaw on week, went up, came right back down to end up flat for the week. We're 0.5% off for the month and quarter, and 1.79% from the 1897 high. Now, sell in May and go away. Is there validity to that? Well, let's take a look at, I've been keeping track of months that are up and down. I know this is crazy. Why would somebody keep track of this? But that's I'm nuts anyway. So 2002 May was down, 2006, so on. The past decade here, we had May was up 6 months and down 4 months. And to date, let's see, this is 13 years. May has been up 7 times and only down 5 times. So anytime somebody tells you this sell in May and go away, you can tell them, that's just crap. Anyway, so that's it. Let's get into some charts. So here's our current monthly candle with 3 more days of trading left on this candle, which is almost a doji. I'd say halfway point is right here. We're still above midpoint, so I'm not overly bearish on the monthly chart, and I don't think there's much else to see here really. Lower shadow came down to our trend line here and was bought back up. Moving on to the weekly, we'll take a quick look at the wide lens view of where I've plotted these trend lines. Zoom in here, and I'm looking at a pretty ugly candle here. If our body was down here, we could call that a gravestone. Still probably similar psychology. We marked out this as a range last week. Whoa, losing my screen. So let's see. This next week, our lower end of the trend line here, calling that 1860 to the high point of 1885. And I think, here's a potential range. This would be a strong pivot. Now, if we cross below that, I'd move into bear mode there. But now, let's examine this as let's move into another chart here. It is an upthrust candle, and we saw what happened here. With this upthrusting candle, we had a bearish week, and this was even a stronger upthrusting topping tail candle, and we had a pretty bearish week that gave us that piercing bottom tweezer reversal pattern. Now we have a smaller one, so I'd say this is a bearish candle, but not as bearish as this one. Okay, and then you have also with 3 trading days left in the month, you gotta. It's not surprising to see some end of month profit taking, and then I think the second or the third day of the next month is when the funds usually come in and start you know window dressing. So the intermediate term here is this would be a good line in the sand. This is previous top. Of course, that would be, you can come down to the bodies here, and that's where I would suspect to find pretty strong support at that level if we came down that far. And I'm not so sure because we look at the daily charts. It's pretty tough mid-channel. Let's get into some daily. Okay, got a few daily charts queued up. This is just a wide lens view, taking a look at the resistance and support levels on how these trend lines are drawn. And I'm going to zoom in here. And here's a closer look now at the previous. This is January previous top, and we'll call that a main support. Here's last week I marked this in a range, and that worked out fairly well. Of course, there's another trend line in here I could be drawing from down here, and I think that's going to coincide with our support and main pivot lines. As if I didn't have enough lines in here already, I missed one. So this area in here is going to be pretty good support, I think. I've got other little pivots in here, but that's the main focus of this chart. Is I'm going to expand the range up here from last week. This was the range I was thinking last week, but this week, with that, you can't ignore that bearish weekly candle. So I think initially we will see some test of lower supports. That's my guess. And we'll look into volume next. Now, before I get into volume, I still have chart patterns, and also this is just some one-year sector comparisons where I've got all these various sectors. You can see how the whole rotation, what's going on here is, all these main ones are coming down. And you can see the unloved, like utilities, that's, are catching ground. Now, I thought emerging markets was going to be stronger than what it is, but, So that's just a little look at some sectors, and right before volume, sometimes I look at moving averages and fibs, but I'm not, particularly, I don't really care about moving averages that much, honestly, or Fibonacci numbers. I mean, price naturally makes its own natural Fibonacci numbers. I mean, you can look at these previous tops become, supports, and price itself becomes its own natural fib numbers. So, it's okay to look at that stuff. I do. But chart patterns now, this is a longer term broadening pattern, and now we have a 2-touch resistance to a 2-touch support symmetrical triangle that price is forming. Also see the potential for inverted head, left shoulder, right shoulder going on in here. What else? I hear people calling, this a head and left shoulder and right shoulder, but, and I'm pretty flexible when it comes to chart patterns. I'm pretty flexible, but, there's certain rules to a neckline that, where's the neckline in here? If this is a left shoulder and you're going to draw a neckline, you can't have a down-sloping neckline on a head and shoulders. For a head and shoulders, you can have a horizontal to an up-sloping neckline. And the reverse order of that is for an inverted head and shoulders, you can't have an upsloping neckline. You have to have it either horizontal to a downsloping neckline. So, this is not a head and shoulders. In any case, previous top, that's what I'm looking at here. This would be 1850 to this area down here, 1840. I think we'll see strong support in there, and that's my guess. So with my respect to the weekly upthrust candle, volume is telling me a different story. The bearish activity that we saw in here, I'll switch, there we go, is no fear behind it. And the volume spread analysis, better volume, is kind of a tool that I use with volume spread analysis. And these reds indicate usually institutional activity going on in there. And there's just no fear behind this move lower. There's no, it's more of a controlled end of month profit taking. I don't think it's an overly bearish indication. Now, with that said, I do suspect that price will want to revert to the 6-month point of control here, again, which coincides with the previous lows set in here, and the previous tops become bottoms, bottoms become tops. That's just a support, pivot, resistance becomes support, or support comes resistance. That's just a basic fundamental aspect of technical analysis. So we do have some bearish activity. I don't think it's really that big a deal, and especially now if we look at I usually throw in a couple of market profile composites, but I'm not really seeing anything that's excuse me, stands out to me there. But here, when you have the price moving upward, okay, and that upward movement is on declining volume, okay, and then when price moves down on increasing volume, that's bearish volume. So now we had sort of some climax volume. This is an intraday hourly chart, and this is where it shows me how the market is really mechanically it's just contrived this down move. So after the spike here, now we're seeing price moving down on lower volume, and this little move upward here is on increasing volume. So, and in the background too, I'm seeing some positive divergence coming in. So that tells me the market's slowing down. And the only market profile this week that looks to have anything of substance is, we have, this is our month, which we've got 3 more days. This is where 70% of the activity. Within that, we have this TPO, time price opportunity. This is showing the highest volume within that. Now, what I'm seeing is that this previous high volume here, this is February over here, this playground. And that's coinciding with the bottom of the playground. So I almost would suspect that price will test the bottom of that playground, and I think that's pretty much that 184. I think that's where some strong buying would enter the market, but we'll see. And the other thing that stands out to me too is U.S. Treasuries is often an indication of where liquidity is flowing, and I see a topping tail on the U.S. Treasuries. I think this is a pretty bearish candle. This is substantial volume. We've got some bearish divergence in here, so if U.S. Treasuries are going to fall, I think that's actually a positive sign for the market, as well as the U.S. dollar has been correlating positive with stocks. And here we're having a supply test. Now we need to confirm the test of supply, we'll need to see what the next candle is. I think we might just see this ABC correction right here within a measured move up. So I'm bearish near term. Overall, I think U.S. Treasuries will remain strong, but I'm near term bearish on U.S. Treasuries. And I am bullish on the U.S. dollar. Looking at the euro, I always like to look at the euro. Now, the U.S. dollar index is against a basket of currencies, so it's not out of the question to see a stronger dollar and a stronger euro dollar. It wouldn't surprise me for the euro to fall down into the cloud to find some support down in here, but so far, look at just really strong top of the Ichimoku cloud. I think I'm pronouncing that right. Terrible with pronunciations. In any case, I overall am bullish on the euro. I think that buck 39 is going to get hit again. I don't know when, but you know, that's my guess. And let's wrap this video up. You can, one more time, you can find me here at HotStockMarket.com. You can see my weekly trading log. I'll have all these images up. This video is just kind of going over the main images. That also want to mention Reddit, another good place to find information. This is subreddit StockMarket. So that's all I got this week. Trying to keep the video down time-wise, and that's it. I will see you on the boards.